Silver absolutely is taking off. And those of us that own a lot of silver, it's really exciting times. Those of us just getting in, it might be a little crazy. Is it time to back up the truck, so to speak, and go all in? Or is it time maybe to sit on the sidelines a little bit? Or a bit of both? Let's discuss. Congratulations to Flip Watson. You are first. Thanks for being here so early. As of recording, spot prices for gold are $4,335, silver $64.33, platinum $1,770. Wow. Palladium $1,517. I mean, that is the core question, right? What do we do? What do we do with the prices of silver and gold continuing to go up and up and up? And I'm sitting here with a bunch of half dollars. As you know, one of my goals is to collect a very sizable portion of half dollars and kind of make that the identity of the channel. And I wonder, because people keep talking about how you should buy silver, buy silver, buy silver. It's running up. It's going up so fast. You should definitely buy silver. Everybody should buy silver. You should never stop buying silver. Diamond fist it, never let it go. But how many of the people shouting that are actually going out there and buying a significant portion of silver? For me, these massive spikes, I love seeing my asset value increase. Who doesn't? But I'm not going to engage my entire channel as if silver will only go in the upward direction for the rest of my life. There will be pullbacks. There will be opportunities to get back in. Maybe the pullback happens at from 69 to 67. I don't know. Maybe the pullback happens from 65 back down to 50. We don't know. We're doing our best educated guess that we can, but nobody actually knows. So I can't comfortably sit here and tell everybody that they should be buying, that you should be buying, and that we all should just be constantly buying when something has gone up 100% in 1 year. It doesn't make sense to me. Now, am I still buying silver? Absolutely. In fact, I just picked up some really cool coins that I want to take an opportunity to introduce and discuss where their origins are from and why they were created, these commemorative half dollars, because, well, it's a half dollar and it's 90% silver. And I guess it fits with the theme of what I'm trying to collect, even though it's not going to be technically part of my half dollar stack. These are going to be more for some fun pieces to put into albums, maybe to represent that I have a proof in that slot, or just make a new collection page full of these. I do think that they're pretty awesome coins, though, and we'll get into what they are. But that's the core question that I ask myself here is, would I confidently be able to shout to the moon that everybody should be buying these large increases in price at this time? I don't know. For me, I am acquiring silver, but I also, at the same time, I'm doing it with caution. I'm picking up a little bit less than I would, and people are going to go, oh, Dragoon, but dollar cost average, dollar cost average, dollar cost average. Listen, okay, 1 second. Dollar cost averaging isn't the best strategy for something that is only going up. For something that is only going up a few percent a day, you would have been better off just putting in $50,000 in at $50 an ounce and then just riding the wave up than you would have been putting $2,000 in a month and buying it incrementally higher. Your dollar cost average would have been actually lower in the first example. Dollar cost averaging works great in something that's extremely volatile, that goes up and down constantly, so that you're not trying to time exactly when to buy. You're just constantly buying. And if you get it at a high dollar amount, well, you buy a little less silver. If you get it at a low dollar amount, you buy a little more silver. Or something that might have a year or two where it goes down in price. And then your dollar cost averaging strategy is lowering your total cost per ounce. And then when it goes back up, you keep buying and you kind of average back out, and you never really had an issue with the downward trend in the pricing. But right now we're talking about silver that is just been running up and away since about 30 something dollars an ounce. And I think that you are a very reasonable person if you're using a little caution here. Even some of you that might be selling a portion of your stack to completely wipe out your cost average, right? If I originally spent $20,000 on silver at $25 an ounce, and it's now gone to $75 an ounce in the future, and it's worth $60,000, and I sell $20,000 of it, guess what? My cost basis for the other $40,000 of silver is $0. So how could you ever tell that person that they are crazy for selling in that situation? I wouldn't. I could totally understand it. And then if there ever is a pullback, let's say there's a $5 pullback or a $10 pullback, or maybe there's a decade of flatlined opportunities, you could always just buy back in then if you wanted to. Or you can deploy the fiat cash that you sold your silver for into purchasing a different asset that has an opportunity to create interest for you or growth or appreciation. This is not an all-in-one game to me. Silver is part of a financial strategy, and it's a very important part of a financial strategy that I have, but it is not the only asset. It's not all my eggs in the silver basket, so to speak. It is just a portion of total wealth of that I'm trying to create for myself. And the metals, silver, gold, platinum, those for me, I want to be my stable, slowly increasing to hedge inflation items. I don't want them to be my speculative plays where I jump in and out and I trade them and I try to take profits. That wasn't why I got in, but that's the reality of where I'm at right now. And I have to accept the reality of the market that we're in now. So if I have to sell 25% or if I choose to sell 25%, I think it's a perfectly reasonable opportunity to take advantage of these price spikes. And if it goes up to 200, guess what? Everything that I kept is also going up as well. So I'm not going to lose out, just on a little bit, but securing profits. You don't go broke securing profits. You don't go broke paying capital gains tax, right? So anyway, let's talk about this. I just wanted to get that off my chest because I hear so many channels just shout and shout that everybody should be buy at these all-time highs. And I just think that using a little bit of caution is a good thing. So what are these half dollars that we picked up here? And why did I pick them up? Well, this is the Columbian half dollar, officially known as the world's Columbian expedition half dollar. Exposition half dollar. It was the first commemorative coin issued by the United States Mint. It was created to signify the 400th anniversary of Christopher Columbus's voyage to the Americas, and to celebrate the world's Columbian Exposition held in Chicago in 1893. The coin was authorized by Congress in 1892. It holds historical significance as the first U.S. legal tender coin to feature the portrait of a foreigner, Christopher Columbus. The exposition itself was a massive event showcasing technological and cultural achievement, and the coins were sold at the fair for $1 each. So basically double their face value because these are 50-cent half-dollar pieces, right? And it helped fund the event, the exposition. Despite the high mintages, many coins were later melted down or entered circulation, but they remain one of the most accessible classic commemoratives today. And you can pretty much pick these up at spot price if you look around or pick up some good deals here. All right, real quick, we'll talk about the design here. And I'll put up a picture right there for the design. The coin's design was a collaborative effort. The obverse, engraved by chief engraver Charles E. Barber, features a right-facing bust of Christopher Columbus based on a model by sculptor Olin Levy Warner. It is inscribed with the United States of America along with the top and the Columbian half dollar along the bottom, with stars flanking the date below the bust. The reverse, designed by assistant engraver George T. Morgan, also based on Warner's work, depicts Columbus's flagship, the Santa Maria, sailing above two hemispheres representing the eastern and western worlds. Inscription include World's Columbian Exposition and Chicago around the rim, with the date split between the hemisphere. The edge is reeded, typical for half dollars of the era. So yeah, these are just recent pickups. I thought these would be cool. I'm not going to include them as like part of my 1% goal, right? But I will include them as half dollars that I own and probably find ways to throw them in there. If you're interested, 1892 has a mintage of 950,000. 1893 has a mintage of 1,548,300. Obviously, a significant portion were melted down, destroyed, lost over the years, but here we are. Also, there were some proof versions created. I bet these are a little bit expensive, but there is a 103 1892 proofs and 100 to 200 1893 proofs. So that's the estimates there. So anyway, that's what I picked up. But should you just be out there buying silver? Well, I can tell you this. I am buying. I'm just buying at a slower, more precise rate. And I am kind of calm on the weeks where the market is crazy. And I'm more aggressive on weeks where I see stability and comfort with my purchases. So there we have it. Thank you so much, as always. Like, share, comment. Let me know, what are you doing? Are you backing up the truck? Are you sitting on the sidelines? Is now the time to buy, or is now the time to be cautious? That is the question on my mind, and I'll see you guys on the next video. Thanks so much.